Good morning, guys. It is Tuesday, November 21st, 2023, the Tuesday before Thanksgiving. I've got my coffee going, extra groggy today. Octane Coffee Company, promoting it again. It's a great coffee. It's made locally here in Utah. I guess I should say roasted here, not grown. Great company. I'll put a link into the description. I really like their coffee. They have three different blends. I'm not sponsored by them. I just like them. So let's get into the news. Retail is the interesting one to look at this morning. There are some companies that are cutting their outlooks and some that are not. The Best Buy is cutting its yearly outlook, which is fine. I'm not too concerned with that. The interesting one is Lowe's, which is actually following Home Depot. Home Depot cut their sales outlook as well. I'm going to read this article directly. Lowe's, the home improvement retailer, said it is now anticipating sales will total about $86 billion for the fiscal year. It had previously expected a range of $87 billion to $89 billion. It projects comparable sales will drop about 5% this fiscal year, worse than the previous anticipated decline of about 2 to 4%. The company expected adjusted earnings per share to be about $13, lower than its previous expected range of $13.20 to $13.60. So a few $1 billion is not a small amount to be down. And this isn't surprising given the fact that housing is down. And that's a complicated number. I don't necessarily agree that housing prices are down, but obviously sales, overall housing sales are down, and it's expected with rising interest rates. So this is just another headwind for the housing market. I don't actually think this is a bad thing because this is one of the few things I do agree with in curbing inflation. If sales do go down, these retailers will be looking to cut costs and cut prices. Now, you could make the argument that they have little control over commodities like wood and concrete and things like that, but I do still think it's going to help cut prices rather than drive them forward, especially if there's oversupplies in the market of any one item. Yeah, I know a lot of these things are commodities, but oversupply is oversupply. So this is an interesting story. We'll see how it plays out. It's going to be very interesting what happens in 2024 with housing. I don't think we're done with interest rate hikes. I think that's going to continue. And so that combined with slowing sales is going to be interesting in what happens with the U.S. economy. I still think we're not headed towards recession because of multiple things I've talked about on the channel. I think spending is still very high considering where we are, considering inflation numbers, considering interest rates. Wages are constantly going up. Another interesting story is the IRS is creating a new tax bracket and adjusting the standard deduction to adjust for interest rates, to adjust for inflation rates. I know you could say, well, that doesn't prove that the economy is going to stay out of a recession. I know it doesn't, but I've said for a while now that I think the rise in inflation is going to be one of the tailwinds to keep us out of recession, just simply because employers still are at a disadvantage compared to employees. So we still have issues with hiring. I myself am in that boat. I have major issues with finding good staff. And so because of that, most employees still can demand whatever they want and pretty much get it. So even though normally these sorts of things would be headwinds into a recession because they're slowing the economy, because employees can just go back to their employers and say, I want more money, they're probably going to get it. Right now, we still have a labor issue, and that's going to keep us out of recession. So each one of these inflation numbers that come out that are supposed to be headwinds are going to end up being tailwinds because employees still have all the power in these relationships. They can still go back to their employers and demand more money. So I think this latest announcement is not necessarily a bad thing. I think cost cutting in retailers is good, and it's going to help the economy. I don't still foresee a recession in 2024, but I could be wrong, but I don't think I am. So that's one of the major stories. The other story I want to talk about is, once again, Argentina. So Argentina is the really interesting one. I know I keep hounding that one, but I just think it's incredibly interesting. The president-elect, Milei, it's at least how I'm saying his name. He is a libertarian candidate. I see a lot of articles that are calling him a Trump-supporting candidate. I think that's very disingenuous. I'm not a supporter of him. I didn't even really hear about him up until a few weeks ago. but I think that he's a very interesting candidate that is shaking up the system. Argentina is a major South American country that is a bit of a secret powerhouse. And so for them to elect a libertarian populist leader is very interesting. There's even another article today, as we've said before on this channel, that the whole world is moving towards populism. The Dutch are going to the polls right now, going to their election booths, and pretty much voting on closed border policies. This is kind of unheard of for Europe and for the Dutch because they've always been very open to immigration. So if you've got very liberal countries moving towards populism, it's not surprising that countries like Argentina are doing the same. His latest proposal is to cut ties with China. This has been their largest trading partner. This is again kind of their move against quote unquote socialism. I'm reluctant to use that word as well, just because Argentina was never that great at being socialist, but that's what they've been kind of monikered on in the news, so that's what we're going to stick with. But he is threatening to cut all relations with China. That's a pretty big move. It's a big question of how much he'll be able to get done, but to cut ties with your largest trading partner is definitely something that is unorthodox. Like I said before, he's a libertarian candidate. We've talked about how he wants to dollarify the economy, so move entirely away from the Argentinian peso and have the currency based more stably on the US dollar. I don't think that's a bad move. I think that's a great move, and I don't understand a lot of the negative sentiment against him in some of these news articles that I'm reading. I think just because he's a populist candidate, which I'm actually a populist myself, I don't see why he's getting smeared for anything other than that. So I think that's going to be a very interesting one to watch. He doesn't take office until December 10th, and I'm going to keep watching this story because I'm very curious on what direction he's going to take Argentinian economy, if he's going to be able to push through any of the proposals that he stated. That's pretty much it for the major news stories. It's kind of a quiet week. The Dow is slightly down. The S&P is slightly down. NASDAQ is slightly down, and so is the oil. Gold market is a little too high for my personal preference. It is at 1997 right now. So as I've said before, the closer it is to 2000, the more uneasy I am about the economy. It's the one indicator I do watch, even though I'm not a gold guy. I've traditionally looked at gold, and I think it is a good indicator. Every time it gets above 2,000, it's like a fever. It's a bad sign for the economy. Every time it's below 2,000, it is usually a good sign for the economy. And I know people will say, well, that's just inflation. Gold doesn't necessarily correlate to inflation as much as you would think. I know that's the general idea. People buy gold as a hedge against inflation. But a year and a half ago, when we were facing like 10% inflation per quarter, gold was remaining relatively stagnant in the same areas. I can look up the charts exactly, but I think it was down around the $1,700-$1,800 price target. Right now, it's closer to 2,000. So gold doesn't necessarily correlate to inflation markets. It's just a good indicator of how the economy is doing compared to this global commodity. And right now, it's not a good sign. So even though I know I'm saying I don't expect a recession, I still think that the fact that gold is on the rise isn't a good thing. I think it is showing something. But just like that, it could go down, and that means the temperature is broken, and whatever was wrong with the economy could be fixed. But that's just one to watch at all times. I highly recommend you watch gold. That's it for me for today. It's a very short video. I will see you guys probably not till Monday. I am going to be traveling tomorrow, so I won't be back here until Monday. Have a great holiday, and I will see you guys after Thanksgiving.